Hey everyone, welcome back to the ICE channel. Today we're diving into a topic that's on everyone's mind, inflation. You hear about it all the time, prices going up, money losing value, but what actually is inflation? How does it work? And more importantly, how does it impact your investment, stock market, forex, and the overall economy? Let's break it down in a simple way. So, let's start with the basics. Inflation is when the general price of goods and services in the economy goes up over time. Think about it. If something cost $1 last year, but now it costs $1.05, that's inflation at work. Because the more prices go up, the less your money can buy. That's why people say inflation eats away at the purchasing power of your money. Inflation has always existed, but it can happen in different ways. It can be slow and steady, which most economies aim for, or can spiral out of control, like hyperinflation. Famous example, post-WWI Germany, where prices skyrocketed to the point that people using wheelbarrows of money to buy a loaf of bread. Governments try to keep inflation under control through central banks. Like the Federal Reserve in the US, they adjust interest rates to keep inflation in a healthy range. The main way we track inflation is through something called the Consumer Price Index, or CPI. It measures the average changing prices over time for a basket of everyday goods and services, things like food, clothing, housing, transportation, and healthcare. Governments and central banks look at the CPI and say, all right, prices are going up but X% this year, so inflation is X%. There's also something called core inflation, which takes out food and energy prices because they can be super volatile. Now we have an important question: how inflation affects the economy and financial markets. Inflation can be a real buzzkill for stocks. Why? When inflation goes up, costs for businesses increase, whether it's for materials, wages, or services. That squeezes profits. And when profits fall, stock prices can take a hit. Plus, high inflation often leads to higher interest rates, which can slow down borrowing and spending. Inflation plays a huge role in forex trading. If one country has high inflation compared to another, its currency loses value. For example, if inflation in the US rises more than in Europe, the US dollar could weaken against the euro. Traders and forex markets keep a close eye on inflation data to predict currency movements. Bonds and inflation are like oil and water. When inflation rises, the fixed payments you get from bonds are worth less in real terms. That's why rising inflation usually means falling bond prices. Inflation is actually good news for commodities like gold, oil, and food. Why? Because when inflation hits, people rush to buy things that will hold their value. Gold is a classic example. People treat it like a hedge against inflation. Interest rates and inflation are connected. When inflation rises, central banks usually raise interest rates to cool things down, which can hurt growth sectors in stock markets like tech. Wages and inflation. If prices are going up but wages aren't, people have less money to spend, which can lead to a slower economy. Consumer confidence. High inflation can make people nervous about the economy, which means they might spend less, leading to even more economic slowdown. Inflation affects everything, from the prices you pay at the grocery store to how the stock market moves. By understanding inflation, you'll be better equipped to manage your money, investments, and even navigate global markets like forex and commodities. So, next time you hear someone talk about inflation, you'll know exactly what they mean and how it could affect in your investment. Don't forget to like, subscribe, and let me know your thoughts in the comments.